Hello and welcome to CEO Insights. I'm Marilyn de Guzman with Investing News Network. We are at PDAC in Toronto and I'm here with Eduardo Covarrubia, Chairman of Los Andes Copper, and he's sharing some news about the company's Vizcachitas project. Welcome, Eduardo.
Marilyn, great to see you again.
Good to see you again.
Thank you.
So I hear you have some exciting news, but could we start off with an overview of the company and bring us up to date on your priority project?
Essentially, yeah. But Los Andes is the Vizcachitas project. In 2 seconds, Vizcachitas is a very large, massive deposit located in central Chile. And we are actually right now advancing on our work, and we're putting out a PFS, as you will know. So yes, very happy to show what the value of our asset is right now.
Yeah, that's interesting. So you did release the prefeasibility study for the Vizcachitas project. So how is it different from the earlier PEA that you released?
Well, we did obviously substantial work, analysis, lab work, piloting. We did a full drilling campaign that allowed us to show how this project grows and has some substantial or robust economics. We declared our maiden reserves of 11 billion pounds of copper equivalent. In terms of resources, we have 15 billion pounds of measured and indicated and another 15 billion pounds of inferred resources. So this is massive. And in terms of economics, we ran it at $3.68 per pound, which is the last long-term consensus that was published. At that price, we are showing a $2.8 billion of after-tax NPV and an IRR of 24%. So we have really compelling economics with a capex of 2.4 billion. And many people ask us, well, why it's 2.4 and not 4 billion? And the reason is that a truck is a truck, a mill is a mill. But the real reasons why we are very competitive on capex is because we're in an area with plenty of infrastructure. So a lot of our capex is tapping into existing infrastructure and not having to build all of that infrastructure from scratch. That's one of the big differences. Also, we are low elevation with all the advantages that carries in terms of no derating of equipment, mild winterizing of infrastructure, and we don't need a camp. So all those things make it for a simpler and thus lower cost project to advance on.
So that simple project, you're making it simple. You've also shared in the past about the process that you're planning to do more environmentally friendly. Could you talk a bit more about that?
Absolutely, because it's a greenfield project, we have the benefit of being able to design this from scratch, adopting what's now being called sustainable mining practices. We believe this is the way mining should be done going forward. We don't need to deal with legacy decisions from decades ago and cleanups that have to be undertaken. So some of the elements that will be taken are, for example, first of all, we're switching to desalinated water. We think that from a social permitting perspective, mining, and particularly mining in Chile, has to go to desalinated water, so we're doing that. We are now filtering our tailings, and that's something that's going to bring our water consumption down by 50%, so that's a huge change as well. And that also allows us to deposit the filtered tailings together with the waste rock in a solid deposit. That brings our footprint down because now we don't need to use two valleys, we can confine everything to one valley. Because those are big technical and changes with a deep environmental impact. From other measures we're doing, we switched from SAG mills to HPGRs. That reduces our power consumption by 25%. And you're going to be using rotainers to handle our concentrate. No more handling of bulk concentrate. We're using rotainers, steel containers from the mine to the ship. So that's much safer from an environmental standpoint and actually much easier to handle, and it opens up more opportunities for different ports to be able to handle this.
Yeah, that's a good description of what you're doing. Why was that important for the company to sort of put a lot of detail into that, making it more responsible? Why is that important for the company?
Well, it shows that it's not only technically and economically robust, but it shows that we are taking the project in the direction that we see mining should be good going forward. Obviously, mining particularly copper mining, is a key piece of electrification. It's a key piece of what the world needs to deal with climate change. But also, as a mining project, we need to adopt the practices that are consistent with this change, and that's what we're doing.
That's great. So where do you go from here, from the PFS? What are the next steps?
Yeah, well, our numbers are pretty compelling, but they also show that there's substantial upside. I mean, you can see we have 15 billion pounds of inferred resources. A lot of this material is actually positioned below the measured and indicated resources, and it's just a function that the historical drilling was shorter holes. So there's an easy upside that we're going to be optimizing in the near future, which is actually going back, infill drilling further down. That reclassification has a massive impact on the cash flows of the project. That's one pretty obvious one. And the other thing is, this deposit is completely open. I mean, we have these resources with 60,000 meters of drilling. And again, some of the step-out drilling is showing that this can grow a lot more. How much? Well, we'll have to do the work to figure out. But the prospects are very, very interesting. Same thing going down. We have several deep holes with good grades in the bottom, with traces of bornite and all the elements you would expect to see for the basis of an underground resource. So we need to do some work to start looking at how this open pit can migrate decades out into production, into a block cave operation, which is what a lot of the tier 1 projects are right now doing.
So now let's talk about financing. Are you raising more capital, or are you
well, we just did. We raised some money with Bank of Montreal at the end of January. That was a very good transaction for us. So with that, that was 10 million Canadian. And we also have some warrants that come due in the next couple of months. So we're going to be sitting on $18 million of cash Canadian. That actually gives us substantial muscle to do the work we need to do, both in terms of drilling, lab work, and advancing on the optimization of this project, and doing some of the early feasibility work as well.
Yeah. So if you're sitting down with an investor right now, what's your main message, and why should they be looking at Los Angeles?
Well, this is a massive deposit with robust, good economics, located in Chile and located in central Chile, a home of very big projects with clean concentrates. And beyond the PFS, we have significant upside on the optimizations that I just mentioned. So that's, I think, the punchline, if you will, of what Los Andes is all about.
That's great. Well, thanks for sharing some updates from your company to date. We'd love to have you again next time to give us more updates.
I hope to be here back soon. Thank you very much, Malin.
Thanks, Eduardo. And thank you for watching. Join us again next time for another engaging conversation on CEO Insights.